Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today in the second video I would like to take a look at something else, not in the gold market, actually by the same reason why we do not talk about the euro currency today, just because market shows not very significant action and not too many things to talk about as in the gold as in the euro. That's why today we have taken a look at the New Zealand dollar instead of the euro, and instead of the gold I think that we could take a look at the Canadian dollar. So it's also the currency that we are not very often considering, but currently on the Canadian dollar it might be formed some very interesting steps starting from the high time frames and down to the daily chart. So for example, on the monthly chart, market could start forming the double repo buy pattern. It comes from the few moments. It's a relatively significant thrust down. On the first upward bounce, market has not reached the 30% resistance, so it means that we will not get the bread and butter trade. At the same time, reversal here in the bottom was relatively strong, so on the monthly chart you even could see the bullish reversal candle. Also, another reason why it might be the double repo pattern on the long-term chart is that here we've got the bullish reversal swing. So this upward swing is greater than the previous swing down, and it suggests that market preparing some more extended either retracement or even some reversal might happen in the long-term perspective. At the same time, in the shorter term, we consider a bit different steps. So, in fact, we're watching for a downside action here because, as you can see, to the upside, market has completed ABCD pattern. So, in fact, we have kind of, not know, but at the butterfly, where you could treat it as the cheaper to sell. This minimum target of this pattern is already done because market has completed the 30% retracement. But you can see that this drop was relatively strong, and market, as I said, has formed bullish reversal swing. Usually, after the bullish reversal swings, market is forming downside ABCD retracement. This happens in most cases. If even it will be not the shape of the ABCD path, just straight downward retracement to the 50% 618 support, it really could happen. Currently, in this area, you could see that after the collapse, market is forming flag consolidation and has formed a bearish grabber that suggests the taking out of these lows. It means that with this overall combination, the chances that market will show direct downward action is a bit more probable than we will see a bit greater, some kind of the ABCD retracement forming greater garbage cheaper to sell before downward continuation. So, with this grabber in place and strength of this downside action, it seems that we could get some downward action here, straightforward downward action, more probable than another leg of retracement before continuation. So it means that while the grabber is valid and market stands inside of the flag, because flag, as you know, is classical downside continuation pattern, we could consider maybe a short entry in this area of the, actually in an area of the grabber range. For that purpose, on the 4-time frame chart, you could see what we have. This is the ABCD pattern. This market could try to complete OP target. It's 22.44. It stands very close to daily 618 support, 23.12. It's just 50 pips lower. Stands around this area as the OP. But also, well, chances are not really significant, but market could show action just to the COP. It's 23.63 because this is the minimum target of the grabber itself. So, as a conservative target, we probably could use the COP initially and see what will happen. So, that being said, for considering taking the long position on the Canadian dollar, we should wait for a bit deeper retracement, completion, or at least erasing of the grabber or erasing the bearish patterns that we have currently in place. And for a longer term, for a more extended time frame, if you're considering taking the position on the Canadian dollar on higher time frames, you could wait even for some greater patterns. I mean, for instance, double ripple buy on the monthly chart. That's also could happen. That's what about the long positions. For the bearish positions, currently we could consider, as I said, this grabber and what performance market will show here in the nearest time. So theoretically, market could continue a downward direction right from here until the bearish grabber is still valid. So in following this ABCD target. So that's the performance that currently we could keep an eye on the Canadian dollar.